Hello students, welcome to Special Issues and Challenges in Financial Reporting. Now you are listening to this topic as part of the syllabus in Dr. BRAOU Ambedkar Open University MBA program. Now we have already discussed about financial reporting, a brief introduction. We are going to talk about the special issues in financial reporting. Revenue recognition is one issue in financial reporting. How do you recognize revenue? There are two concepts in accounting. One is cash concept, another one is accrual concept. When it is cash concept, you will recognize the revenue only if you receive cash. In the other format, the accrual concept, only once it becomes due, you will recognize. Once it becomes due, you would recognize the revenue. In the sense, you might have received the amount, you might not have received the amount. Whether received or not, once it becomes due, you will recognize it as a revenue. Let's say I have sold goods worth 10 lakh rupees, out of which 5 lakhs are on credit, 5 lakhs on cash basis. My sales account shows 10 lakhs rupees, 10 lakhs. But how much cash I have received? I have received only 5 lakhs. But the account shows sales 10 lakh rupees. Now, if I record all 10 lakhs, it is under accrual concept, whether received or not. Once it becomes due, it is considered. It is considered as revenue. It is recognized as revenue. In a cash concept, only when it is received cash, you are recognizing. Fine. Now, when there are complex contracts and accounting standards, then considering which one is a cash transaction and which one is a credit transaction, segregating is a big challenge. Now, sometimes there are contracts which are long term in nature. It may be as long as 10 years duration. For example, to lay the Konkan Railways track, it was about 4 to 5 years, or at times when you look at Hyderabad Metro Rail project, it was about 5 years to construct, just to raise the columns, and to commission the project it is nearly 10 years, starting from approval stage, preparing the DPR, detailed project report, till the first metro rail started, it is about 10 years. So, the longevity or the duration is so long. In that case, to recognize the revenue, for the first 2 years, there is a huge loss seen by Hyderabad Metro Rail project. And the government has to come to the rescue of the Hyderabad Metro Rail L&T company, right? That was there in the news, maybe in the beginning days of the Metro Rail of Hyderabad. So, what is this? They have not recognized the revenue. If they recognize the revenue, then there is no cash. When there is no cash, there is no money to meet the commitments, be it salaries or power that is consumed by the Metro Rail from the Telangana Southern Power Distribution Corporation or Transco. So, there are many commitments the company has to fulfill, and there is no money to fulfill those. So, this is a challenge. Then compliance, at times the way that Italian company recognizes revenue is different from that of the way we are recognizing the revenue. But when you are having a partnership with a foreign entity, you need to get integrated with the IFRS. And at the time, your way of recognizing revenue is different from those countries' companies. You have to integrate. At the time of integration, there's a challenge. So there's something called, experts in the financial field have checked out something called fair value measurement. What is fair value? You take so many dynamics, so many factors into consideration, and also add your judgmental value, and also some factors which are volatile in the market, and come out with a figure, that's estimated fair value of the accounting figure. Let's say, how do we value this stock? When you say how do we value this stock, whether I should take the market value or calculate or estimate something which is fair value. If I take market value, market is highly volatile. Today, look at this, there's a disturbing scenario in the Middle East, and due to which, the countries are shivering how the fuel prices are going to be affected. And they are getting prepared for any challenge that may be witnessed in a couple of decades, or even immediately, a couple of years, right? So the market price is always volatile. Should we consider that to report in our financial statements, or let us look at so many factors, examine them, assess the dynamics affecting those factors, and let us also add our experience, our expertise, that's called judgment, then come out with a figure and report that in the financial statement. There's always a confusion in this matter. Now, when it is a leasing accounting, the challenge is even more as per the International Financial Reporting Standard 16. And you're also finding it very difficult. You'll find it very complex. How do you classify the lease liabilities? Lease liabilities. Do you know lease? Now, for your understanding, let me present a lease. You are purchasing an iPhone. When you're purchasing an iPhone, it's very expensive, right? It's about 1 lakh rupees, and you are ready to procure it, but your ability is not supporting, you have just 10,000. Then the company comes forward and says, yes, you can pay 10,000 per month. In 10 months span, you can pay all the amount of 1 lakh rupees. That's a good idea, you take that. Now look at this. Until you pay the last installment, the phone belongs to the vendor, the seller. Why? Because you have not paid him full consideration for the phone you have purchased. Then, I am keeping the phone, it's mine. You may be possessor of the phone, you may be the custodian. The company treats you as custodian. The company gives you right to use the phone, but you don't have the ownership. Okay, if it is financed by the Apple company. But there are certain middle management, middle level, vendors. Who are they? They are financing companies. Bajaj Finance comes and says, no, you can pay the remaining 90,000 in 9 equal installment, equated monthly installments, EMIs. Fine. Now, the Bajaj Finance company takes the ownership of your phone from Apple, and you will be just custodian and you have the rights to use that phone. But at any time until you pay the last installment, EMI, the Bajaj Finance can take back your phone. Same thing applies to your motorbike. Same thing applies to your motor car. And same thing applies to your home. Fine. So, how do you, this is a liability. You are taking the asset, you are taking the, loan, and what's that? It's a liability. Now, for the corporate, the machines are procured, the assets are purchased by the company because the machines are, each machine is costing 100 crores, 200 crores. Do you know one machine in my company, it's about 100 crores, just one machine. Okay, 100 crores, it is not paid just at once, it is paid in installments. That's called lease finance. There is a company which sells, let's say, PET CT scan machine, PET CT scanner or mammogram scanner. Okay, and this company, let's say Panasonic or Siemens sells these products. Let's say Siemens sells it to us, to me, my company. There is somebody in between comes and says, I will pay the full consideration to Siemens. Or at times Siemens itself or Panasonic itself may say, I will give this machine on hire purchase. You will purchase and also you will use it on a hire basis. Though you are purchasing, it is not a full purchase because you are not paying the full consideration to me, the manufacturer and vendor. You will use it as a hirer. You are leasing my machine for 10 years or 5 years, right? So this is called lease liabilities for the corporation. You have to pay to those companies who are selling those machines or equipment to you, those assets to you. For you it is an asset, for them it is a good. For you it is a liability, for them it is an asset. So when you are reporting, when I am reporting as a company, these are called as lease liabilities. There's a complexity of lease liability, right? And there is an impairment of assets. There's very often there's a subject to judgment. Subject to judgment, this is always should be put to regular testing. When it is judgment, it is subjective. It's my opinion. When it is opinion, it may be different from others. Or it may be my opinion, it sounds valid, but that can be challenged by others in the board. So, to what extent this opinion or judgment is accurate, subject to the conditions of the market, to what extent it is accurate. So, this should be put to test. And impairment tests require frequent and subjective judgments, and estimation of future cash flows and the market conditions also add the uncertainties, and this is a reason for the impairment of the assets. The assets are not balanced. There is one more challenge, one more special issue in the currency, that's currency translation. This is called, because of while transferring one country's currency or while converting one country's currency to that of another country's currency, there is something called translation risk. Let's say there is a company called Cognizant, or there is a company called Deloitte, or there's a company called, let's say, Volkswagen. It's a German automaker and it's manufacturing cars in India and selling to the Indian market, let us say. When they have brought in money to set up the company, they brought in dollars. When they are taking money, they have to take money in again dollars. Okay, they have to take in dollars. When they are taking in dollars, you had to convert whatever revenue that is generated in India into dollars, okay, or German mark. If it is from Germany, you had to convert into German mark. If they want it to be universal across the globe, all their annual reports to be presented in American dollar terms, so that there is a uniformity in reporting. Now, your rupees revenue that is generated out of sales of the car from the showrooms, and the service revenue, when you are servicing the vehicles of these people, these your customers, you also generate revenue. So whether it is sales or service, there is a revenue generated. That revenue is generated in Indian currency. That currency has to be translated, converted into dollar terms, and only then it is presented in the annual reports. Fine. Quarter 1 you have done in Indian rupees, all the data. When there is a revenue generated in the first month, let's say 4 lakh crores are generated, but at the end of the third month, when it is to be translated, converted into dollar terms, because you have to report in the books of accounts or annual reports, what happens is the dollar rupee exchange in the first month was it was low. Now it is increased. What happens? There is a change in the value. There is a change in the value. Let's say few rupees were enough in the first month to buy $1. Now more rupees are required to buy another $1. Let's say $1 in the first month was 60 rupees, $1 now it is 80 rupees. What happens? When you are converting into dollar, in the first month, let's say 10 lakh rupees. 10 lakh rupees when it is converted, there is some amount, and the same 10 lakh rupees when it is converted into dollars in the third month, where the dollar is 80 rupees is equal to $1, there is a depreciation in the value of rupee. When there is a depreciation in the value of rupee, what happens is, when they are taking less dollars, that's loss to the company. Do you understand? Due to volatility of the currency of the domestic country, there is a translation risk arising. There is a loss arising. That loss is called as translation risk in finance parlance. But a common man's understanding, due to currency translation from one country's currency to another country's currency, there is a loss suffered by the company. That loss is a translation exposure or translation risk. This is another special issue, and the fluctuations in the exchange rates which impact the financial results also is a big challenge which has to be addressed. And to address this, what corporates often do is they indulge in hedging. This hedging again, it's very often is a zero-sum game like. What is hedging? You're taking a counter action. If you see that the dollar is going to strengthen and rupee is going to weaken, then you take a counter action to this movement in the currency. And this is a kind of game you are playing. This is adding more complexity to reporting of the currency exposure. Actually, you want to withhold, you want to withstand the loss, the translation loss, the translation exposure. For that, you are indulging in hedging. The hedging strategies are more complex because you have to take a counter action. Now, there is one more issue here, deferred tax or taxation. Deferred tax. Defer. What is defer? Defer means postponement or procrastination. Deferred tax means instead of paying the tax now, you will pay at a later stage. You're paying maybe next year, you're paying maybe another year. Okay. So there are so many changes in the regulatory issues, provisions with regard to this deferred tax revenue. Okay. And then also, what is the tax liability? What is the tax liability of the current income and how to adjust it. Let's say you don't have profit this year, there's a loss. You carry forward this loss to the next year, okay, and deduct in next year's revenue. You had to pay, there are certain mandatory taxes you had to pay, and instead of paying this year, you will pay next year. Or at times you have already yielded profit, you have to pay the tax, but you are saying, I need money for my emergency needs, I will pay the tax next time or next year. When you are having a profit and didn't pay the tax, then you are liable to pay the interest on the tax also. So, tax liability, deferred tax liability. It is not just the tax and there is an interest. Let's say it's as simple as your income tax. When you don't pay the income tax, 2 years back, I also had to face this. I paid my income tax delayed by 10 days. I had to pay about 5,000 fine, right? It's a deferred tax liability. There's a deferred tax liability about 3 lakhs or so. On that, I had to pay another 5,000, which is penalty. You call it interest, you call penalty, whatever it's a compensation for late payment. Okay, then there are frequent changes in the laws. Okay, that also adds to the complexity of uncertainty, right? A particular year 20% on capital gain, another year there is a 30% tax, and some in certain years there is a import, on the import there is a tax, and certain years on the import the import duty is reduced. So there are, it's so dynamic. Every financial year there is a budget introduced, and there is economic survey tabled in the parliament. There's a discussions, debates organized in the parliament by the policymakers, the members of the parliament, and the outcome comes out as a budget. And in that, there are changes in the tax slabs compared to the previous tax slab. And the accountant, the one who is dealing with the accounts, has to learn the change and also to be aware of what was previous, because you are carrying forward loss. If there is a loss, you are carrying forward the tax liability, deferred tax liability. You are supposed to pay last year, you didn't pay last year, you are bringing it to this year, right? You should be aware of the tax provisions last year, and you should be aware of this year. And if you are deferring to another year, next year's provisions also you should be aware, right? So this is another challenge in our reporting. Now, consolidation is a big challenge again. What is consolidation? Now, intercompany transactions. What are the intercompany transactions? It may be you have your own companies, okay, variable interest entity. You may be having your own units. You may be having different companies under the same ownership, or you may be dealing with other companies. To make you understand so simple, you are drawing a DD to pay for your tuition fee to Dr. B.R. Ambedkar Open University. Now, you may be asked to take the DD you are requested, you are instructed to draw the demand draft or banker's check from the State Bank of India only. But if tomorrow, if the university comes out and says any DD is okay, you submit the DD in favor of Dr. B.R. Ambedkar, Registrar Dr. B.R. Ambedkar Open University, or Controller of Examination Dr. B.R. Ambedkar Open University, okay, or whatever name or designation that is given, you have to draw the demand draft. When this freedom is given, some people take the DD from Axis Bank, some people from the HDFC, some people take from ICICI Bank. There are many other banks, okay. From different banks, let's say there are 10 banks the students have taken, and from each bank there are about 6 to 7,000 students, and in SBI there are about 10,000 students have drawn the DDs. What happens? All the DDs are collected and collected by the bank, and it will credit to the concerned accounts wherever it has to. When it is crediting, the total amount came to, let's say, 2.5 crores. In this 2.5 crores, 0.5 crores or 50 lakhs belong to SBI. The remaining 2 lakhs belong to other banks. Now, other banks' DDs have come to you. You, the university, you means here the university. The university also had to make some payments for material production, to pay for the teachers who are giving lectures, to pay for the staff salaries, to pay for the professor salaries. Okay, you have to pay these people. When you had to pay, you will pay in the form of check or DD. When you pay, you have to pay to those concerned banks. Okay, you issue your SBI check, they will take it and deposit in their HDFC bank. Already there are some HDFC bank checks with you, right? There is a cross transaction, right? When this cross transaction take place between companies, within the company there are several segments. All those have to be consolidated, which is another big challenge. And regulatory challenge, there's a bias, there is a fraud and misrepresentation. Okay, this internal control, if your internal control system is not strong, then it leads to misrepresenting figures. It may not be fact, but you very boldly just print that in the annual report. And ESG, I already covered this, and this is all about our special issues. Now, to sum up, we will take into consideration the ESG, the ethics, the fraud, okay, the poor knowledge, the internal control. Okay, these are the issues we have to consider while we are presenting the annual reports and the financial data in those annual reports. In addition to this, let me just tell you, there is a translation exposure which you should not forget. Those who are taking finance as a specialization, you should understand the consolidation and translation exposure. These two issues you should master, and that's what you call hedging. And if you master this, you are expert. Thank you.